Welcome to Dragonfly Trading. My name is Carrie, and I'm a full-time Elliott Wave trader in the crypto and forex markets. Today's video is going to be an update on mostly Bitcoin. At the end, I am going to go over ADA as per request. Today's video is going to be a little different than what I normally do. I'm going to go over what I'm thinking on the higher time frame and why I'm thinking that way. And then I'm going to go over each count that is currently on the table and what the invalidations are for that count. Remember, this is not financial advice. This is just the way that I see the market. Not sporting a headband today, but maybe tomorrow's video I'm going to go over ETH, and maybe I'll be sporting one that day. All right, so remember that our masterclass is complete. If you are interested in becoming an independent trader yourself, the link is in the description below. So let's get started. So I am on the BLX chart where you have the most data available for Bitcoin. I'm sure there's probably a chart that has more, but this is good enough, I would say. So the most important thing that I want to talk about here is that when we get up into this upper range, these waves look small because I'm on log scale, and these look big. But it's actually not that. I mean, it's actually that these are much longer than you think. So I'm labeling it here 1, 2, 3, 4, 5. All of this as our primary wave 1. This third wave was gigantic. It was 112% from the bottom of wave 1. And it took 1,239 days. Now this wave from 4 to 5 looks like it's a bigger wave. But it was only 12,289% from wave 4. And it took 1,050 days. So that's why I am labeling it this way, as this is our primary wave 1. When you look at how long this looks, you're probably thinking to yourself, well, why is this so bunched up like this? If you get off of log and you go to linear, you can totally see that this is why I'm labeling it this way. This looks like a 1 wave, 2 wave. This looks like a 1, a 2, and this is pretty obvious of how big this wave actually was. So it looks small here, but this one wave is bigger than all of this combined. Wave 2 was an 84% correction of this entire move. We had this wave 1. This wave 2 came extremely deep. It was a 93% correction. So with the rules of alteration, I don't expect our wave 4 to be as deep as our wave 2. Will it come deeper? It's possible, but I don't expect a 93% correction. When our 4 is complete, whether it's complete here or we still have more to go, we're going to go up for our wave 5. Our wave 5 is going to look like a bull run. Pretty much. It's going to look like this wave 1. Then we're going to come down for another wave 4, which likes to come into the previous 4. This is most likely going to look like a bull market. I'm sorry, a bear market when this happens. And then this wave 5 is going to look like the most massive bull run ever. And what that will eventually be, who knows what the prices will be at that point. Because this is probably more than a year or two away. So this is what I'm looking at now. Can this count change? Absolutely, it can change. But as it stands right now, this is what I'm going with for the overall count. I'm sure there's some Elliottians out there counting it different, and I may have to change it, but right now this is what I'm going with. All right, so we're going to go into this next chart, and what I've done here is I've overlaid some corrections that can happen. Now we are assuming this is our wave 1, this is our wave 2, this is the top of our third, we are making 4, and then we'll get a 5th to the upside. Let's talk about it. Now this wave 4, no matter what it does, cannot come into our wave 1. So this red line is our red line of death, meaning that we cannot break 13,876. Okay? We cannot even touch it. Or this is going to turn into a different count. And the whole chart that I showed you before is going to need to be changed. So let's talk about these corrections, and then we're going to look at them a little closer. So the white is a triangle. This can totally still happen. We've got an A coming down. We would create a B coming up, a 3-wave C, a 3-wave D, and then the E does not necessarily have to touch the trend line. Now, normally in triangles, you see zigzags in every leg. They don't have to be zigzags, but they have to be 3 waves. Once we create the E, we will break out. The count in yellow. It is assuming that we have a 5-wave to the downside. We're going to make a 3-wave to the upside, and then we're going to make 5 waves to the downside. And it's also assuming that we don't get a deep C wave. Now we have 2 counts that look similar. It's a blue count and a pink count. The blue count is the most bullish correction we can have. It's a running flat. Now I talked about how we can get up there, and we're going to talk about that in the next chart. But this is assuming that our C makes a running flat and truncates and protects this low altogether, makes a higher low, and then we take off for our 5th. The count in pink is the exact same as the account in blue. The only difference is we would make an expanding flat and come deeper. Now both the blue and the pink count break the high. They break the high of this A wave. This is going to fake you out and thinking that our 5th wave is coming, and then boom, it comes to the downside. All right, let's move in a little closer. Oops, wait a minute. No, I was going to move in closer on this one. All right. I'm going to go over these a little more here and tell you how we can get each of these counts can happen. Let's start with the yellow count. So the yellow count is assuming that we have 5 waves here. Actually, this one's here. Sorry about that. That we're going up in 3 waves, and that now it's complete or soon to be complete, and we're going to make 5 down. That is one correction that can happen still. The triangle is obvious. This is assuming that we have made 3 waves. We're making 3 waves up for B. We need to make 3 waves for C, 3 waves for D, and then the E can either be truncated or it can come down to the trend line. Then we blast out of here for our 5th. Let's talk about now the blue and the pink. 3 waves to the downside. We make 3 waves to the upside, 3 waves to the downside, and then we either come up in 3 or we come up in 5 to get up there. This is what we call the expanded B pocket. They would hit this pocket right here. Then, if it's a running flat, you're going to have 5 waves that truncates and protects this low. If you're going to have expanding flat, you're going to have 5 waves that come deeper. The expanding flat is the one that can come very deep. The one that in my previous video that I showed how deep it can come, where we can get all the way down to this support. Okay? But this is our red line of death. We do not want to hit that. So there's still a lot of corrections that can happen here still. And nothing has been completely ruled out yet. Okay? So the only thing that has been ruled out is that this is a wave 1. No, I'm sorry, that's not the one. Let me correct myself there. That this is a 1, a 2. All of this was 3. We were making 4, and we were going to go down for 5. That has been ruled out. Okay, that's the count that we absolutely didn't want because it would have taken us deep and we would have definitely hit this red line. But it's been ruled out by us coming so high here. Okay, let's get into some counts. I'm going to show you the bullish count first. The bullish count is assuming that the correction ended here and that what's happening here is that we have created a 1 and a 2 of this white third wave, and this is a 1 and a 2 of the 5 waves inside of it. If we break 44,000, this count comes off the table. Okay, this little move up we have, if we come down and we break 44,000, this becomes invalid. Now I know a lot of people want this count to happen. I am not particularly leaning this way, but I'm not going to rule it out. The reason that I am not leaning this way, and I want to go over this because I've had questions about it. The reason that I'm not leaning this way is the first reason is because this move didn't hit the 618, meaning that when you pull an extension on this leg and up, none of these legs here, none of them can partner up with this ABC right here. even if it ended over here, you can't partner this one up because it doesn't hit the 618. So the next question probably is, well, if we ended here, why can't this be a wave 1 and a wave 2? Because this is a 3-wave move. I have dug into this so deep that I am pretty confident that that is a 3-wave move. And we cannot take off on a 3-wave move. Impulsive. Meaning that a wave 1 can't be 3 waves. So I've also been asked, well, why can't we just continue? Why am I not confident in the bull count? This is the reason. The way that this whole structure is right here leads me to believe that this is the low. This was the absolute low right here. And the absolute low we took off in 3 waves. If we would have taken off in a 1, a 2, a 3, a 4, a 5, that would have been totally different. I would have accepted this being an A, a B, and a C, and done. But it didn't do that. Can this count happen? And I be incorrect about this down here? Of course it can. That's why I'm showing it to you. And I'm showing you the invalidation point. But I'm also showing you why I'm not particularly leaning this way. And I hope this cleared up the questions that were asked. Okay, let's move on to the other counts. So the other count I have is that we have an A, a B, and a C to the downside. We've got a 3-wave move here for an A. Then we have a 3-wave move for a B. And now we're creating a 5-wave move for a C. Most likely, the C is very close to being done, or we're coming up here to this 2.236. And it'll be done then. Then, as I've gone over before, we're either going to get this partner leg at that point to the downside in 3 waves or 5, or it's going to get more complex. We're going to come down. This is going to turn into an A or a W. This is going to turn into an X or a B, and then we can get up higher with a 5-wave move or a 3-wave move. And this is how you can see how the triangle and getting up there for those B waves can happen. Now the next count I'm going to show you is not much different. It's just labeled different. The next count is we came down in 3 waves, which I'm calling an A. Or a W. The only difference is I'm labeling this W, X, and we've come up in 3 waves instead of 5, and it's going to be a Y. If we start breaking 50,500, this count is not accurate. The WXY count. But this count is still on the table of it being an A, a B, and a C. It's just a WXY cannot go as high as an ABC. And it's same exact thing as the ABC. When it's done, it's either done here, and then we're going to get this to the downside in 3 waves or 5, or we get more complex, and that was horrible, but you get the picture. 3 waves, 5 waves, we get up there for those higher Bs. And this is what we want. We want these higher Bs because it makes this leg higher. Okay? So let's take a look at the RSI and what we got going on here. We do have bearish divergence going on here. And each time we're getting rejected lower and lower. So I do feel a correction is coming very close here. There is one other option we have. And that is this last leg is actually in a diagonal, and it's a 1, a 2, 3, 4, 5. And it's an ending diagonal. But it would be a C ending diagonal, not a Y. So I feel a correction is close, and we're going to have to see what we get. Do we break this red line and invalidate the bullish count? Do we just come down in a 3-wave move to give us the chance to get up here higher? Or do we come down pretty violently and get our partner leg now for this one? Okay. Sorry about that. Too many animals. All right, so I had a request for ADA. ADA to me looks like it's pretty much in the same position as Bitcoin. The only difference with ADA is that we can't call this a 1 and a 2 because this came too deep and broke the 1. So calling this a 1 and a 2 like Bitcoin is off the table. So actually, we've got to call it like this, that this is a 1, this is a 2, this is a 3. Now this is where it gets sketchy, and I'm going to go over it. 4, 5. Okay, 5 is going to be much higher. Now, what you need to watch out for on ADA is this being an A, a B, and a C, just like Bitcoin. Now it's broke its high. So a lot of people probably think that this is a 1, a 2, a 3, 4, 5, and you're on your way for the 5th. Okay. This is what we call the expanded B pocket. So what could be happening here is that this first move down was an A. We're going up into the expanded B pocket for a B, and then we're either going to get a running flat C, which is a very bullish correction, or it's going to come down deeper for an expanded flat correction. This is something that you need to be careful of. If we break the expanded B pocket and we touch $4.66 at the 1.618, then this is all the fourth wave. I'm sorry, over here is all the fourth wave that you got. And what's actually happening here is this is the start of the 5th wave, and this is a 1, 2, 3, 4, and 5 will break up and go past this 1.618. Okay, so be careful of that with ADA, that the expanded B can happen. You can go up into this pocket and come down pretty violently with a C. So protect yourself if you're in a long for this to happen. All right, I hope you enjoyed this video. I hope that it helped, and I will see you tomorrow to go over ETH. Have a wonderful day, everybody.